Hey everyone, it's a straddling stock options podcast here for Thursday, July 6th, 2023. Well, it's past noon. We're getting closer toward the end of the day, so it's time to do the Straddler to talk about the companies that have moved the most today that might be interesting purchases for an option period that expires relatively soon, but still gives you 6 market days, which is the 14th or the 21st of July. So first of all, let's talk about what I discussed yesterday, because it's a good time to do this, because as I look at my portfolio, I see that the AstraZeneca, unbelievable, but the AstraZeneca once again has moved enough today for me to sell one of my options at a profit that covers more than the cost of both of them. So we'll find AstraZeneca here in a second. And then there it is. So AstraZeneca, which options were really inexpensive, which is one of the reasons why they were so why they kind of stuck out as moving more than they should. They're not a huge share price company here at just $62 a share, but they announced this like lung cancer drug that's not working very well or something, and it's hurt their stock recently. So once again today they move $1.54 as of this update. They've actually moved a little bit more in the last 15 minutes. So I bought a couple options for about $163, and I can sell one of them. The put, the $67 strike price put is the one that I have. I can sell that for $168. I can make $5 right now, and still have the call option on them, which also has value. Call option right now is worth $24 if I try to sell it. So if you added those two together and you said 100, and it's now up to like 168, let's call it 165 plus 25, let's say. That's $190. Well, you only invested 163 in this. So it's been one day, and you can make $30. It's crazy. And it's guaranteed money. So just selling the put option is what I recommend doing, and I'll probably do that here before the end of the day, see if they can go down a little more. But you could also sell both options and just take that profit of like 25% or something in a day. That's phenomenal profit when you think about it. If you make 25% a day on all your trades, you would be a millionaire within a year, depending on if you put in like $50,000 or $100,000 and you start making 25% per day. Think about that. If you put in 100 grand, you make 25 grand in the first day. If you make, that's what you could do if you loaded up on these options and did things like play AstraZeneca and have them do what they've done just today. You can still hold it longer too. Like there's a lot of options. That's what they are. They're options, the things you can do. So we can see that AstraZeneca is right here moving 93% of their boom number, or just getting really close, and you can take profit when a company moves like this. When these boom numbers are high, that means that whatever option you had, you already have the opportunity to sell one of them, one of the two paired options that you bought, one of the calls and the puts at the same strike price. You get to sell one of those for more than the cost of both, and this is how much you make, over 100%. So anyway, well, let's look at today. Is there anything good on here today? Notice that I've gotten all the option dates updated. So they're the option that comes due the soonest is only going to be the 14th, and then there'll be some 21sts on here as well, with companies that don't do weekly options but have their options spread over sometimes a month or something, and so they'll have a structured date that's not necessarily one of the weekly dates. So anyway, that's why some of these are like 7/21. Now, those options obviously have longer time on them. They're not going to expire as fast, and that gives you a little more value when you're purchasing them, because you have more time for the company to move. But as for what you can see, what's happening today is it's a lot of like home buyers and stuff, home related things that I guess have dropped today. That's what's been going on, is the change has been going down. And so that's your Lennar, your Home Depot. I saw KB Home was on here, but I deleted them because their share price was just too low to really care about all that much. So some of that stuff moved down. Home Depot has been an interesting one. Home Depot has shown some profitability in the past. You can see they had a good week last week, a good week a couple weeks before that too, I believe. See where we have them rated. Yeah, not good on the 16th, but good earlier in June. They do tend to move, but their options are expensive at $650. So even though today they moved more than that, they moved $7, they are a high share price, but they are expensive. And so you understand you're actually risking more money when you spend more on the option, because your intrinsic value of the option you're measuring that has some actual intrinsic value at any given moment has to be, it's however far it is away from the strike price. So if you start landing on your strike price, you can lose a lot of this $600. And so that's why I kind of recommend buying it, because they're probably going to get there, but they're also a bigger risk. So they're for people with a bigger budget and a bigger tolerance for nominal risk. I recommend things more like this. Like I've looked into this and I think I'm going to buy this right now. So Toronto Dominion, they're only $60 a share, so that's not great. They're a low share price company, but they moved to $1.81 today, and this is a really, really inexpensive number at 160. So I'm going to look up Toronto Dominion, and they're down 3% even right now. They're down, yeah, $1.86. The note on it says that broader financial sectors trading lower with market weakness, so a bigger than normal day is understandable. Now, how much do those options really cost right now? And also notice that's the 21st. So you've got even more time on this one. Another reason that this is good. I almost want to color these. Let's color these dates so that a date that is further away is green. Let's do that. We're going to do that by having higher numbers be green and lower numbers be red, which we'll do it right here. And that will show you that, yeah, that's an option that has a longer time on it. So it's another good reason to buy it. So I'm looking at their option price for the 21st. It's between 85 and 100 for the call and 65 and 89. Spread range is not excellent. So as we update this right now, we say at the strike price of 60 even, you can buy it between 85 and 100. And you can buy the put between 65 and 80, actually. So let's reevaluate this company for the new information that we have. All right. Are they a good buy? Well, that's a good sign. We've got time. They moved more than they need to just today. That's a good sign. We don't have to worry about this stuff right now because it's not the end of the week yet. So this is kind of deceiving. So we're just going to hide it to get it out of our way because it does screw you up. Don't pay attention to that till I do a final look at the option for the period of time. That's the only time that those columns actually matter. So let's more here. Total risk, $165 on average I can buy these for. That's really low. That's great. Break even percent. They only need to move 2.7% between now and the 21st. It's a long time for just less than a 3% move. That's good. Today's change. They got there just in today. That's great. Price per share is bad. So don't expect them to move a lot and make a fortune. Understand that. And then the spread range is 17%. That's a little higher than I like. I'd like the spread range to be under 10%. So that's not a good factor. But you're within $15 here on both of them. I'm going to go for it. And what I'm going to do is I'm going to try to get them inexpensively. So I'm going to come in with a limit order for the call. I'm going to try to buy the call at, let's say, I'm going to try to buy the call at exactly $85. And I'm going to try to buy the put at exactly, actually, I'll give it a little bit. I'll buy the call at, call it 89 and the put at 69. Do those two, that ends up being about $70 after fees plus 90. So it's $160 you would get them for if you get them at that price, which is doable. That's a good buy. So I'm going to try that right now, and we'll see if we have any action on those orders before the end of the day. So 89 for the call, putting that in. And for the put, $60 put, It is, it's actually dropped a little bit from 70. Yeah, I said 69, right? We're going to do 69. So I put that in and we'll see if any of those actually fill today. All right, that is done. Okay, so that's kind of the logic of going through this list. Now, what about other stuff up here? I looked into this DRI Horton. This is another one that actually seemed pretty interesting. So the reason why I'm skipping over Mercado Libre is that this is $6,400. This is a tremendous gamble with a lot of money out of the range of most human beings. And so this is just, I'm just going to let this go. I could even remove it from the list because they're so expensive. But as you can see, they moved $8,500 in intrinsic option value today. So if you bought one yesterday, you crushed it in terms of making a few $1,000s. But that's out of the range of discussion, and it's also got it's just too much money. Like, it's too much risk. So I almost want to remove the ones with the big, huge risk. But it's nice to track them just to keep an eye and see how often they hit. Now, DRI, this one requires research here. So they're a like consumer staples company or something. They are consumer discretionary. They make money, but they're having a drastic, weird drop over the last few days. Concerns about rate hikes negatively impacting the housing market. So something housing related. Now, the thing about them is their share price is at 115. That's pretty good. That's over $100. The spread range is really good. So let's take a sample right now of what this actually costs right now. All right, this is the best way to do this, is to go in and query the option price when you're considering buying it, and then putting that information in here to see if the price has changed, because a lot of things can change. So now they're at a strike price of 115 because they've dropped. You can buy the call for between 195 and 210, and you can buy the put between 160 and 175. That makes this a $370 purchase now. They have to move 3.22%, which is okay, but not great. And they've had a couple days of draft. The spread range is good. And it's only 370. So it's close. It's a little bit expensive, a little bit, but they moved more than that today, and they got room to move at $115 share price. So this is a pretty good buy. And you don't want to say no to the algorithm. Now, there was a company yesterday. What was it? SPX. How are they doing? This one. So today they're not moving a ton. And I stayed away from them yesterday, even though they were at the top of the list. So the reason why I did it, I thought the reason why they were moving didn't seem like it was substantial. And they also only had a $78 a share price. So it was good to avoid that yesterday, but I'm not seeing the same issues on DHI. DHI had a good moving week last week. It's got a higher share price. This is probably going to move a few more bucks. And so you need it to go down to 111 or up to 119. That is not out of their realm of possibility. As you see that they've been between 122 and 115 over the last 5 days. And over the last month, they went down as low as like 113-ish. So it's possible something's causing them to move more than normal. And really what you take from this is that the algorithm is digging up something that's kind of not being picked up by the option sellers in the market right away. Like, why is this company on this tear downward? It's looking a little different in their chart than reasonably over the last few weeks. So you've got some value here. That's more of a substantial mover. So that's really on the list to buy. I think I'll probably buy that today as well. The oil companies come and go, and oil is an interesting market for playing this. You can see that ConocoPhillips and Exxon are both only about 300 and change to buy those. But at the same time, their share prices are right around 100. This is one where I feel like you're fighting to be even on a lot of these because you don't know whether today's going to be a day that oil moves. It can move drastically, though. So, you don't see great weeks in the last few weeks. Gas has kind of been low. There's a lot of weird things going on. I'm going to stay away from the oil, but they are there to probably make small profits with actually doing this. That's why they're on this list. Here's another home developer in Lennar. Lennar's not as expensive, and the share price is pretty good here. You can see this is better value than DHI. It's only 327 bucks, and the share price is greater at 120. This is pretty good. Lennar's looking pretty good here. They only have to move 2.72%, and there's some activity in the home buying sector going on today that will probably ripple another day or two or until these options expire. So you've got some time for them to move $4 off of 120. It's possible, right? So even though I took the cheapest one on here, some of these are good too, and they require more evaluation. But I felt like it's time to do the video, show you how this works for the day, talk about Astra Zeneca once again, doing basically what they need to do and get into a profitable range. Another day in a row that is the third day essentially, because if you count Monday, if you knew before this was going to happen on Monday, Wednesday, Thursday, all moves greater than or close to 100% boom, making them profitable. Yeah, I can sell the AstraZeneca for $174 right now. It's about time to sell this one, in my opinion. It's about time, because you can't say no to what's about 7% profit in one day. And then it's more than that, because you still have the other option of the two, which is worth $24 still right now. So you got to add that to your profit. It's 24 plus 12, $36 on 163 bucks. I mean, multiply that out. If it was 1,600 bucks that you had invested, you'd be making 300 or something like that. Like, it's just, it's really, really reliable. And it's not even close to you not making money. This thing doesn't expire until the 14th. You're here on the 6th, banking profit already. It's really, it's the greatest stock market playing strategy I have ever come up with. It is, it doesn't require you to guess which direction it's going to go. It just requires you to find value in the market where companies are moving more than people realize, and they're not selling the options at the proper price because they just can't react to the movement that's happening so fast. So it does these things, and it provides a lot of value. What's this down here? Oh, that's AstraZeneca, of course. I was like, where's this? What's this cheap one? Yep. You could buy them again. Like, you really could. Like, there's no reason not to. It's just one of those things. You can jam it almost every day on certain companies. You could have done that with AMD, Advanced Micro Devices. Let's see how they're doing today. They're one that they just refuse to move slowly. I mean, that company, not AMD, AMD. 17 of them. I guess we'll have to say micro. We're going to find it in a second. Oh, go up. Is it up top? Nope. All right, we're going to do micro. I still put it micro devices. There we go. They're not having a big, huge moving day today, only down 90 cents. And their options are a little expensive, but you just keep an eye on them, because they've been all over the place from like 128 to 108, like over the last 2 weeks. They're all over the place. So they probably keep moving around at some point, but you can see they're not super great on the list here because the cost is still too high. If you can ever, get AMD, there was a time months ago where you could get these options on AMD for like 300, 350 bucks for a week, because nobody expected them, and they were making money hand over fist left and right every week. So you can see that the people selling these options did eventually adjust. The Greek letters that apply to options movement, stuff like that, adjusted over time. And so people caught up. And the key to doing this right is to be on top of it every day, catching it right away, and getting something like DHI before it goes up, getting something, getting in on TD super cheap, moving more than normal. And of course, AstraZeneca. And American Express was up on the top of this list earlier today. They've been a good one that I've used in the past. You can see it's about 400 bucks, but their share price is 170, and they don't have to move that much, and they tend to get there every week. I think I've made money every time I purchased American Express and did this at least once or twice. So that's probably a good one. It'd be nice to get this option down under $400. just so that there you go, moving 460 today. So there they are. As really another thing that the algorithm recommends. So that's the Straddler podcast update. Enjoy. May all your trades be volatile. I hope you made money on AstraZeneca. I'm pushing the sell button right now to sell mine because I'm happy taking some profit. I'll sell it for 175 bucks. Let's say. I don't know. We'll see. All right. Good luck, everyone. May all your trades be volatile and winning.